This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Welcome to Bloomberg Radio, to our audiences worldwide. Romaine Bostic in today for Carol Massar, and I'm alongside Caroline Hyde.
Hi, great to be here. Carol Massar, Tim Stenivek, off having a nice time with Santa Claus, I think. And meanwhile, we are setting up this hour on this Monday, December the 22nd.
Yeah, and speaking of Santa Claus, a lot of people talk about that Santa Claus rally, which traditionally doesn't really start to the day before Christmas, but we're sitting on 3 straight days of gains right now, Caroline. And this is a bit of a turnaround from some of the sentiment we had coming out of November, when we saw a big sell-off to a certain extent of some of the big tech names and maybe a little bit of an embrace of some of the non-tech names as we head towards the end of the year.
And instead, now it fefeels like we've got AI anxiety lifting a little bit as people head towards this, what is a shortened week. We've got some of the biggest names delivering the biggest upside in the NASDAQ 100, for example. You got Nvidia back on top, Broadcom, and all the previous winners. I don't know what the shifted in terms of sentiment, whether it was just they all got a bit too beaten up.
Yeah, I think they got a little bit too beaten up, and it gets down to valuation as well. Nobody's saying the AI trade is over. Nobody's saying that there's no money to be made there. But when you look at the run-up in valuations, it stands to reason, particularly at the end of the year when people have to adjust those portfolios to sort of keep under their caps, why you would see some selling in some of those big names like Nvidia, and then people piling into others.
And then we've got a bit of M&A Monday. We've got a bit of merger back and forth, Daddy's in Town Monday. We've also got a little bit of what's shining in gold and silver. But what took our show off...
Did you say Daddy's in Town?
Daddy's in Town. Larry Ellison's in town. And he is back in that Paramount deal.
It would be so nice if I had a parent who would just spot me $40 billion.
Yeah, it's a shame mine isn't one of the wealthiest in the world.
Yeah, I mean, I love my family.
Would you like to buy Paramount, though? And then would you like to buy with Paramount Warner Brothers Discovery?
I can say with absolute certainty that if I had $40 billion burning a hole in my pocket, I would not be spending it on Paramount. But, to each his own, as, of course, Larry Ellison, or I should say David Ellison, of course, tries to put his stamp on this new revamped company. And, that was the big story for much of 2024 or 2025. It's probably going to still be the story in 2026.
Oh, yeah. And then I think what's been so interesting is some of the deals being done in not just energy, Alphabet buying Intersect, but also we've got an asset management acquisition of Nelson Peltz's Trine Fund, going with a VC, General Catalyst, to buy up Janus Henderson. We've got so much to talk about, folks. But first, I hear Charlie Pellet is standing by.
Hi, thank you very much, Caroline Hyde, Romaine Bostic. What a delight to have you both with us this afternoon. We've got the Dow, the S&P, NASDAQ all advancing right now. And indeed, a Santa Claus rally perhaps underway this week. Holiday shortened trading week, but gains nonetheless right now. Green on the screen, right to the numbers with the S&P up 38. We're off session highs, still looking at a gain right now of just about 0.6%, 68.72 where we stand on the S&P. Dow Industrials up 230, up by about 0.5%. NASDAQ up 115, up by about 0.5%. Broad-based rally. Russell 2000 index of small cap shares pushing higher by 1.3%. Cannot ignore the Bloomberg Mag 7 index up now by about 0.7%. Your 10-year at 4.16% with a 2-year 3.51%. Gold, spot gold up $94 the ounce, 44.33, trading at a record up 2.2%. West Texas Intermediate crude oil up 2.5%. WTI 57.91 a barrel, and Bitcoin right now up by about 0.8%, 88,871. Paramount Skydance has sweetened its bid for Warner Brothers Discovery, including offering a personal financial guarantee by Oracle Chairman Larry Ellison as it seeks to beat out a rival bid from Netflix. Right now, we got Netflix shares down on an update for much of the market. Right now, Netflix is down 1.4%. Oracle shares, they are surging 3%. Paramount Skydance up 4.1%. Warner Brothers Discovery, the focus of all of this attention, WBD on the ticker, up now by just about 3.5%. So again, recapping, equities higher with the S&P up 0.6%. We do have the 10-year at 4.16% on the 10-year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All Our thanks there to Charlie Pellet for that business flash as we check back in on the broader markets. A third straight day of gains, rounding out what could potentially be for the S&P 500, Caroline, an 8th straight month of gains. And it's been several years since we've seen that happen. You have to go back to 2017 into 2018, the last time we had that stretch of gains. And
this has been a record year. I mean, we're treading very close to an S&P 500 record. NASDAQ 100 less so. Big tech is not managing to eclipse some of its October real highs, but still clawing its way back. And it feels as though energy is back in to what has been a complete equity outperformance throughout this year. The question is, are the same big winners going to be winning next year?
Yeah, a big question here as we set up for 2026. Let's bring Jason Pride into this conversation, Director of Investment and Strategy and Research over at Glenmede. And Jason, talk a little bit about the setup into 2026, but maybe you can do it kind of with the backdrop of what we had or what we knew coming into 2025. Did things shake out the way you thought they would?
Ultimately, I don't think anything shook out the way people generally thought we were going to be seeing things. There is some concern as we head into 2025 about tariffs, but man, the door was completely blown off the hinges on that basis. In April timeframe, people got extremely pessimistic at that point in time. I saw a number of calls for recession in that early April period, only to then have everybody have to dial back those expectations back to something that was actually maybe a little bit more similar to what people had originally penciled in. And then you add on top of it the fact that this very large fiscal bill came together in a way that people didn't expect, and with a magnitude of front-loaded stimulus that will hit in these first, say, 3 years of its true implementation, which really sets us up in 2026 economically for what we believe is going to feel like an acceleration in 2026. So 2025 has largely been held back by the implementation of majority of the tariffs that we'll ultimately see, with very little in the way of the stimulus coming from the fiscal bill yet in 2025. 2026 will almost feel like a double loading of that same stimulus, and basically a very large stimulus cannon and only a remnant of the tariff impact. And so the math of it switches from a net negative in 2025 to a net positive in 2026.
So Jason, as you run your scenario analysis, at least from an economic perspective, what is the biggest risk that you're at least keeping an eye on that could maybe upend that thesis?
That's a great question, Romaine. And we have 3 risks that are on the page for us. Probably what we mark as the most probable is that with all this stimulus, we actually get a little bit higher inflation than what we intended to have. And therefore, the Fed will have to actually pull back on the magnitude of cuts that they have in place. Now, the biggest magnitude risk that we see on the table that we think is actually still a lower likelihood, but if it hits, it's a big risk, is this magnitude or large, really large bet on AI that both investors and the companies they're investing in are making side by side to the tune where we're starting to talk about numbers in terms of investments now, that it's becoming less and less likely that every single company and every single investor that's making investments in this direction can win at the same time.
Right. So are you expecting the chickens to come home to roost as soon as 2026 in that respect? Or do you think that the AI exuberance can carry on for a little bit longer?
So first and foremost, we think that fiscal stimulus is good because it allows the market to broaden out. Right, so that's good for investors on the whole, as long as you're not just invested in the AI bunch. In terms of whether the AI risk will come home to roost, look, our suspicion, we still think it's a risk. We still think investors need a position around it, generally speaking. But we suspect that the actual outcome of that in terms of when it's truly a risk is more likely to be 2027. I wouldn't bet everything on that, but more likely to be 2027, because the companies are actually doing the investment in this technology cycle are 5 times as more productive with their free cash flow generation and therefore able to weather bumps that come along a lot better than those baby bells were in the internet build out.
Well, many feel that 2026 will be a year where we get an IPO or two to actually challenge, or a bit of a referendum on the AI exuberance. Maybe we get a SpaceX, maybe we get an OpenAI. Is that something you're bracing yourself for, and would you want to be exposed?
we would love to see the mergers and acquisitions, opportunity set just kind of open back up. Like if that happens, that's good for the rest of the marketplace, not just technology, not just these hot companies. Just generally speaking, that is good for the marketplace. Remember, this is an environment over the last, say, year and a half to 3 years, somewhere in that ballpark. We've seen a market that has seen kind of more limited exits from private equity. So you've had this kind of growing kind of questioning of private equity that has occurred. At that same time, that truthfully, the smaller cap and mid cap portions of the marketplace have been kind of left out of having some of those newer companies to own as part of that market cap, that marketplace as well. So we would really encourage and be happy to see a growing or more exuberant M&A environment that actually allows both private equity to breathe and small cap and mid cap to actually have some newer companies come into their mix.
Jason, always a pleasure. Jason Pride over at Glenmede here as we continue our coverage on Bloomberg Television, a look at 2025 and a push ahead to 2026. And of course, the economy and the Fed will be a big part of that. We had a chance a little bit earlier in the day to catch up with Fed Governor Stephen Miran, who talked about his outlook potentially for monetary policy.
If we don't adjust policy down, then I think that we do run risks of rising recession. The unemployment rate has poked up, potentially above where people thought it was going to go. And so we've had data that should push people into a dovish direction.
Stephen Miran speaking a little bit earlier on Bloomberg Television. Let's bring Elizabeth Renter into the conversation, senior economist over at NerdWallet. And Elizabeth, you have a good sort of finger on the pulse when it comes to not just what's going on in the economy with regards to inflation, the labor market, et cetera, but how people are actually feeling about it. And I'm wondering if you could maybe start there, particularly when it comes to the issue of affordability and inflation.
Yeah, well, thanks for having me on today. Consumers are not feeling great about the direction of the economy, and that's true whether you're looking at data from the University of Michigan, the Conference Board, some of our sentiment data here at NerdWallet. We found just this month that 61% of Americans believe the U.S. economy will enter a recession within the next 12 months, and this discomfort is really understandable. Wage growth is low. The labor market is cool. And, many Americans are feeling an affordability crunch.
When we talk, Elizabeth, about this idea of the state of the economy, if you look at the economic data, it suggests a labor market that is certainly weaker than what it used to be, but still relatively strong, at least by historical standards. Are you getting the same read?
Yeah, absolutely. And, when we're talking about, why do people feel so bad if the economy seems to be doing okay? This is a story that we've been discussing for the past 5 years now. And when we first started talking about Recession a couple years ago, we were asking the same questions, but the conditions were a little bit different. And I think the primary difference now is households aren't as resilient as they were 2-3 years ago. So debt levels have risen and sometimes exceeded where they were before the pandemic. Housing is expensive. It's holding many people out from being able to purchase a home. And, if you would typically want to switch jobs, find a better paying job, you're kind of out of luck right now there too. So while people are still feeling bad when the economy is doing okay, I think there are some real reasons for that now that should be concerning.
Prices on the rise, particularly if you think about energy or electricity. I think of a deal today where Alphabet parent company Google is snapping up Intersect Power, which is all about power for data centers. This is about a climate-friendlier version. But how much are we likely to see the economic headwinds still come thick and fast when it comes to just everyday utilities, when it comes to energy, when it comes to groceries, when it comes to the like? Is there going to be any easing by what, indeed, at least the Federal Reserve is going to do? Because that doesn't feel like in any way they're going to be tackling inflation in that way.
Yeah, so it depends. If we're talking about monetary policy and what the Fed sees as easing as reduced inflation, inflation is likely to continue to moderate, albeit slowly, but that's going to feel very different to consumers, right? If you ask a general consumer who isn't in tune with sort of monetary policy and how it all works, they'd probably prefer low interest rates and cheaper prices. Well, we know there's a trade-off there. Having those two together is extremely unlikely, if not impossible. So inflation slowing isn't necessarily going to make people feel much better, particularly when wage growth is slow.
What we'll do is having a job and a well-paid job. At this point, will 2026 beckon new jobs, new productivity, or actually is AI going to take it away?
Oh, that's a good question. I think, AI is going to change the labor market, but I do think it's going to take some time. We've seen this with technological advances in history. Probably the most recent one was the internet, and before that computers, and before that electricity and steam power. So AI does have the potential to really reshape the economy as we know it, but I do think it's going to take some time to be adopted and to really displace workers.
Liz, I want to get your thoughts here on just how to invest in 2026, particularly through the lens of the types of clients that you deal with at NerdWallet. You look at the run-up in prices that we saw this year, largely because of AI and tech, and there is a lot of people who maybe did not necessarily get to ride that train. When you start to talk about portfolio allocations in 2026, do you sort of overweight that tech sector, specifically that AI sector, or do you look for something a little bit broader?
Well, that's a really good question. The way I think about it, speaking to the general NerdWallet reader and NerdWallet consumer, is to think long term, right? We know that less than half of Americans have $2,000 socked away in a rainy day fund. And so primarily, before you start thinking about where should I put my investment allocations, you should be stocking up bare bones emergency fund, right? And then be thinking about retirement and long-term plans. As far as picking stocks, the general public, maybe not advanced enough to start weighing those factors, but I do think really building household financial resilience needs to start at a more basic ground level.
Are you seeing that resilience, though? I mean, I understand there's a sort of an upper echelon of our country, of our economy, that have always been invested in risk assets, but there does seem to be a little bit of a waning interest, at least from what I could tell in the data, once you get down into the middle classes and below.
Yeah, so we recently fielded a survey about plans people are making for 2026, and a fairly good share of people are planning on investing in AI, planning on starting businesses, planning on things that we deemed sort of more high risk. But I do think, at the end of the year, we're all generally a little optimistic about what the new year's going to bring. It's why many of us set New Year's resolutions we can't achieve. But I do think, by and large, the waning consumer sentiment is going to lead people to be a little more conservative in the coming year.
I like the way you take us back to the vibe session. That is about vibes rather than data. But for 2026 in January, what is the data that you care most about to be able to signal how we're all going to be feeling?
Yeah, a primary metric I'm going to be looking at in January and February, the first few months of the year, is layoffs. So when it comes to the labor market, we know the cooling is due to both labor supply and labor demand issues. And the magnitude of those two things is a little unclear with the fuzzy data that we've been getting. So I'll be looking at layoffs in the JOLTS report to see, are these big layoff announcements that we've been seeing so much about actually translating into layoffs? That would indicate to me that it's more of a demand issue and maybe more cause for concern.
Is there any demographic this is going to be impacting the most, do you think? Is there any areas of layoffs or particular industry groups that you particularly focus on?
Well, we know the latest jobs data showed that, marginalized communities are seeing an uptick in unemployment rate. And generally, when the unemployment rate starts to rise rapidly, we do see it in the youngest Americans and underrepresented minorities. That's happening right now.
We want to thank you. It's been fascinating talking to you. Thank you for pushing us forward into 2026 and dwelling on some of the trends that you've been seeing. That was Elizabeth Renter, of course. She's coming to us from NerdWallet, and really interesting how she's trying to take the bigger picture, drill it down into a macro impact, but investment impact for those that do read NerdWallet. But it is about how people feel.
It is about how people feel. And we kind of talk about the vibes out there. And it's easy to look at the market gains and think the vibes are great. But a lot of people, unfortunately, missed out on that ride. Whether they catch up in 2026 remains to be seen.
We're actually going to talk vibes of traveling next.
Yeah.
And maybe if you have bet on the stock market, maybe you can afford to go traveling. I don't know. Bloomberg's got a great list, though, we can dig into.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all advancing. We're off session highs, still looking at a 38-point advance on the S&P, now at 68.72. That is a gain of just about 0.6%. Dow up 212 now, higher by 0.4%, while the NASDAQ Composite Index is up 119, up by about 0.5%. NASDAQ 100 Index up 0.4%. Broad-based rally with the Russell 2000 Index of small cap shares advancing now by just about 1.2%. Our Mag 7 index, by the way, up 0.6%. Your 10-year, 4.17%. Gold surging $92 the ounce, up 2.1%. Trading at a record $44.31. West Texas Intermediate crude also rising, up now by 2.5%. WTI $57.94 a barrel. And Bitcoin up 0.7%. 88,800 on Bitcoin. Alphabet has agreed to buy clean energy developer Intersect Power for $4.75 billion in cash, plus its existing debt, marking one of the largest deals by the tech giant in its push to dramatically expand its data center footprint to power AI. Alphabet shares up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. Look, we are at this moment where I'm going to ask you if you're going away this holiday season.
We are going local away.
Nice.
We're going to go skiing on the East Coast, which is always dicey in late December, but we're going to make the best of it. But at some point, it'd be nice to get away. They don't actually let me take vacation here, Caroline.
No, we've got you locked.
I know.
Right?
Yeah, I'm surprised they even let me take Christmas
I
off.
lobby for you every day. I put in several words. You're a hardworking man, Romaine. But when you are maybe allowed to exit a desk or two, maybe we could go further afield than just up East Coast. There's plenty of places to be going. Maybe you could take a flight rather than a drive. And maybe because flights are actually getting cheaper. That's what our next guest is saying. I was kind of surprised by that. Steve Hafner's in the house. He's co-founder and chief executive officer of Kayak. Of course, this is all about booking, about travel platform, really telling us the direction of travel and what consumers want right now and what prices they're going to have to pay. Steve, I'm really interested that you're seeing that demand is surging, but actually prices pulling back a little bit, particularly on flights.
Yeah, it's an interesting story. And by the way, this is the third year Kayak has partnered with Bloomberg on teasing out travel trends for the next year. So thanks for that. Yeah, it's an interesting picture. Travel demand in terms of flights is up 9% on Kayak, but fares are down. So domestic fares, and you may have seen this, Romaine, when you were booking your trip to go skiing, are down 3% year over year. Flights to international destinations are down 10%. So it's a good time to get away.
Romaine's not going internationally, though. So where should people be going? Where are people dialing up? Where are people leaning in and looking for opportunities? I'm hearing so much about Eastern Europe at the moment in particular. I mean, a load of my sister-in-laws just hid over there at the moment. They, of course, are European-based, but they had a great time.
Yeah, it's funny. The trends are very solid to go to Eastern Europe versus the classics that are out there. And we think what's driving that is a few factors. People want to go to the new gems versus the classics. Not only is it more convenient to get there than ever before and less crowded, but you're also getting a lot more value for your money, particularly on luxury hotels. So $500 goes a lot further in Sofia or Prague than it does in Paris, France, obviously. And then we also see two other trends that are pretty interesting. One is sports and concerts are driving people to go places that they perhaps didn't contemplate before. And then ecotourism. So despite the lull in sustainable travel that some folks have speculated about, people still want to go see landscapes and animals that might not be around in 10 to 15 years from now.
Okay, that's a little dark.
That's depressing.
Steve, though, you got to help me out, though. As I'm kind of the planner in our family when it comes, not kind of, I am the planner in our family when it comes to vacation. Anyone knows who's tried to plan a vacation, particularly for a big family, it's a pain in the butt. I mean, it takes forever. It's trying to get everybody on the same page, coordinate all the flights, everything else here. Talk a little bit about specifically what Kayak does, if at all, to kind of try to make that process a little easier. I mean, I'm told by Caroline Hyde, as host of BTech, this has been the year of AI. Is that actually going to help me? Like the next time I plan a big trip, am I going to have to spend a lot less time?
Absolutely, it's gonna help you. And we're at Kayak, we've got AI sprinkled throughout everything we do. But in a nutshell, I've given the same advice to people for 15 to 20 years. If you're trying to save money on flights and you're trying to get a lot of people to agree on a destination, do three things. The first one is be flexible on your dates, because that way you've got more opportunities to find deals. The second is consider multiple airports. So not just LaGuardia in New York, but also JFK, White Plains, Newark, heck, even Hartford. And then the third thing to do is set price alerts so that you don't always have to go back to Kayak or any other site anytime you're looking for a flight. just tell us what you're looking for in broad terms, these kind of destinations, this date range, this price point, and we'll do that automatically for you and send you price alerts, which is it's a great service. But AI will definitely help all of that too.
Yeah, I am curious. And by the way, just as a side note, White Plains probably the best kept secret in the tri-state area.
Don't tell anyone.
I'm a little upset you actually put that out there. But in all seriousness, though, it gets to the idea too that as we start to see the evolution of this technology, I am curious as to whether you think that's going to drive more business, or is it just going to basically be the same customers spending the same amount of money, but just with a little bit more ease in booking?
Well, I think it'll actually create and reduce, it will create more opportunities to reduce friction in the booking path and make it more convenient to travel. And usually when you do that, you stimulate demand and you actually stimulate more usage of the product, right? By taking friction out. So I think AI will make it easier to contemplate strange trips or complex trips, multiple destinations, long time frames, lots of different passenger types. It will help in terms of making the booking so that conversion rates improve. And then where I think AI will really help is in flight disruptions, travel disruptions, changes in your plans. Instead of having 5 different people to call, you can actually do a lot of this in an automated fashion with agentic AI. And that's where I think a lot of us in the industry, Kayak in particular, are focused on.
What's interesting is you hear about sort of the anti-AI bet, the idea that we're all either going to be so productive we'll only be working 4 days a week, or we'll all be so bored of just chatting to our chatbot that we actually want real experiences with real people. And to that point, the idea that we're going out and going to sports events, that we're going to music events and we're spending around that does take a little bit of extra money. Do you have a sense from the macroeconomy that this is all playing to the hymn sheet that you see in terms of demand surging in 2026, or is it a certain select few who are able to be spending right now?
Well, look, I'll be the first to admit, as well as everyone else in the industry, that travel is discretionary good. It's not like groceries. You don't need to have travel, but it's also something that people just dream about. If you're involved in your day-to-day drudgery, it's really nice to know, even in 6 months, that you've got someplace special to go to. So I think the consumption for travel products and services will still be there. But what is changing is people's spending power has declined. So instead of going to Europe, perhaps for some folks, where the average fare is about $1,000, you'll stay local in the U.S., where the average fare is around $350 to $400. So I think people are shifting where they're going and how much they're spending to get more dollars or more value for the dollars they spend.
Hey, Steve, always appreciate it. And before we let you go, you got to let us know, what is your bucket list destination, that one place you haven't been to?
Yeah, so I've never been to Croatia. It's one of our trending destinations. So I'm going to eat the Kayak dog food, and I'm going to Croatia in June of 2026.
All right, Steve, always a pleasure. Steve Hafner there, co-founder and chief executive officer over at Kayak. We want to keep this conversation going here. We've got, like 3,000 journalists and analysts at this company. There's probably only a couple dozen that I actually subscribe to. Anything they write, I get an alert. And Kate Krader is one of those people. She's our food editor here at Bloomberg, and had a great piece that she's contributed to with regards to where we're going to travel potentially next year, where we're going to eat as well. Kate, I want to start off with travel first, because you guys had a great piece, you and your team, about some of the big destinations for 2026. Argentina, Indonesia were a couple places on there. Sardinia, which I think caught Caroline Hyde's attention. What jumped out at you most?
Well, I think it's such a good list all the way around, and it makes me think I need to go all around the world and figure out how to work remotely for the next
be a
couple.
Digital nomad, Kate.
Let's do it, Carolyn. Let's do it. The place I went to that I'm especially excited about is Taipei. That is, you've probably heard a lot about it where you guys sit in the front row, of course. NVIDIA and all the semiconductor news is coming out of there. So it comes up in a lot of conversations, but it's also a food world favorite because bubble tea, which I know you guys are drinking, was invented there. And then Din Tai Fung, who are the most famous soup dumpling makers and the most profitable ones, it's also where they got started. Now there's a Din Tai Fung just pretty much all around the world. But I'd been hearing so much about it. I said, why depend on exports? So I got to go there, and they have these fantastic night markets. And Jensen Huang from NVIDIA, I was hoping I would see him there, but
drinking beer with his mates, sending chicken through the roof.
Wouldn't that be amazing if I'd seen him? But he wasn't there when I was there. But just the whole food scene is fantastic, and they have these like billions of dollars in tech money, but it also feels old school. It's got this great sultry vibe. The food's fantastic. So I want you guys to put that on your list, please.
Oh,
Noted.
Definitely. Go Asia and other ways in Asia. There's lots of really hot spots. Indonesia was another one that caught the eye on the particular list. Is there themes? Like, who are the types of people who are going to these particular spots in Asia? Is America a really big area of growth for them?
Yes, no, I think the thing that's interesting about this year, and you were just talking about it with the Kayak CEO, is that I think everyone in some ways wants to stay local. Everyone's had a big travel nightmare this year. It's been a tough year to travel. But you do want to put at least one place on your bucket list and then just go as far away as possible. And Indonesia is one of those places. But it's also, if you want to hang out in America, there's a bunch of hotspots here. One of them is Texas. Texas has been making a lot of news. The FIFA World Cup is going to be there. There's the new Wall Street, I guess it's called Y'all Street, is coming. So there's that. And then the Ozarks too, which I've never been to, but I think like with those mountains, it sounds so beautiful. Alice Walton just has a terrific art museum that's about to open in Bentonville, Arkansas. San Francisco's coming back. I think that it really had a tough time during the pandemic. And now they too are going to be home to the World Cup. There's a fantastic park that's opening on the waterfront. So it's just really almost anywhere you want to look
Charleston
in the US.
As well. I love the idea of Charleston. I actually went there for my 40th, not to age me too much. But
oh, you did?
Nickel Hotel, I think, was one of the places. But what an incredible place in the South.
No, it's cool. And then I think another great thing about this year that I feel excited about is how much ecological or environmental, it's early days, but success stories, Gabon, where you can see some gorillas that's actually benefited from Jeff Bezos, who has his $30 million Earth Fund. And that's actually making a difference. In India. There's tiger reserves, and that's a species that's seemed like it was practically extinct, and now it's coming back. There's thousands more. I love that idea.
Yeah, Kate. Yeah, great stuff on here. Don't forget about the butterfly sanctuaries. Our thanks to you, Kate, and your cat there in the background. Kate Krader has one of the best jobs here at Bloomberg of all time here, leading our food and travel coverage.
It's a tough life for some.
It's a tough life. I hope she gets to go to all these places, not just write about them.
Sounds like she's had a healthy.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. We are close to session highs right now. 1 hour, 20 minutes to go ahead of the closing bell. S&P right now is up 42, 68.77. Gain there of 0.6%. Dow Industrial is up 246, now up 0.5. NASDAQ Composite Index up 0.6, while the NASDAQ 100 Index up 0.5. And the Russell 2000 Index of small cap shares climbing now by 1.3%. 10-year at 4.16%, with the 2-year 3.50%. Gold up $93 the ounce. Spot gold up 2.1%, 44.32, while West Texas Intermediate crude oil is up 2.6%, just below $58 a barrel. Bitcoin up 0.2 at 88,349. Uber Technologies and Lyft are each teaming up with Baidu to test out driverless taxis in the UK as ride-sharing companies race to deploy autonomous services around the world. Uber says a pilot program using Baidu's Apollo Go RT6 robotaxis in London will start in the first half of 2026. Commercial services expected in the city before the end of next year. Uber up now by 2.3%. Crosstown rival Lyft, yes, based in San Francisco as well, Lyft up now by 2.8%. Again, recapping the Dow, the S&P, NASDAQ all higher. S&P up 0.6. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. Let's talk more about some of the tech stocks that are on the move. We're hearing from Charlie, the NASDAQ is higher. Some of the points contributors, Warner Brothers Discovery.
Yeah.
Unsurprisingly, is Paramount Skydance comes in with, it's not a sweetened bid.
Yeah.
It's an amended bid.
I have no idea what this bid is. So, I mean, Netflix has roughly an $80 billion bid on the table, more or less, for Warner Brothers Discovery.
Not all of it, though.
Paramount Skydance has another bid on the table that's over $100 billion, and that includes the cable assets.
Exactly.
Is Comcast in there somewhere?
No, they took a sideline.
Comcast is out
Ryan
of this.
stood down. He said,
Okay.
I'll get lunch with you, David, sometime.
Okay, so basically right now, Netflix, Paramount, going after Warner Brothers Discovery.
Yeah.
What's the outcome going to be, and who's going to decide it, Caroline?
Regulators might decide it.
Regulators.
David Zaslav's going to decide
And by
it.
regulators, you mean Donald Trump?
We can ask our next guest, as that's who I mean, because let's turn our
I
attention.
mean, it is the elephant in the room.
It is the key elephant in the room. Let's invite him in.
I just
Chris
noticed this big
Palmeri,
microphone behind
Bloomberg News Senior Editor for Entertainment. Like, Chris, we can put the Trump administration and the relationship with the Ellisons to one side for a minute. Romain's going to go there. But first, remind us how this deal's been amended, because it does all come back to Larry Ellison, as basically every single story in media and tech right now seems to.
Yes, it does. Yeah, I mean, there was a lot of questions. How really committed is Larry Ellison to this deal? How much is he standing behind his son? And this response today is $40 billion worth. This takes a big step towards addressing the concerns that Warner Brothers board outlined last week in its filing. So in addition to a personal commitment from Larry Ellison for all the equity in the deal, they've agreed to give Warner Brothers flexibility in the interim so it can make licensing deals over $10 million, for example, and change its executive pay. These are all things that Paramount wasn't conceding to. They also bumped up the breakup fee if the regulators don't approve their deal to $5.8 billion, which would be paid to Warner Brothers by Paramount. That's matching Netflix. So they're a big step toward meeting some of Warner Brothers' demands.
I am curious, though, Chris, about just the structure potentially of the deal and the idea that Netflix's deal actually involves lenders, banks, I should say. On the other hand, you have the Paramount deal, potential deal, that at least on the surface seems to be now a personal project that would be pretty much funded to a large extent by Larry Ellison himself. Have we gotten any sort of sense here as to whether shareholders in Warner Brothers Discovery would prefer one structure over the other, not just the aggregate amount being offered?
Yeah, and I just want to clarify that this is a personal guarantee on the $40 billion by Larry Ellison, not meaning that he ultimately will actually contribute $40 billion in equity. There are other partners that have been identified, Middle East sovereign wealth funds, Redbird Capital, et cetera. Ultimately, their plan is not to have Larry write a check for $40 billion. But that said, there are differences in the balance sheet for sure, and that's one of the reasons why Netflix refinanced its debt today, to kind of underscore that it has an investment-grade balance sheet and would continue to do so.
Sorry, let me just rephrase the question a little bit, because my understanding is that right now, with the way that the Netflix deal stands in terms of the financing itself, those lenders wouldn't necessarily be taking an actual stake per se in the company directly. So no dilution potentially for shareholders. What we know about the Larry Ellison $40 billion commitment, would that involve other outside folks taking an actual equity stake in whatever the new entity ends up being?
Yeah, so minor dilution on Netflix part, because they are offering some of the purchase price in Netflix stock, so there is a little dilution there. Huge dilution for Paramount shareholders, because that $40 billion in equity is being put in, and so that means more stock of Paramount Warner Brothers that will be owned by the Ellisons and their partners. So yes, the Paramount shareholder is seeing dilution.
The Paramount shareholders looking on, Warner Brothers Discovery have until January the 21st if they are indeed going to accept this go direct share offering coming from the Ellisons. But we know from last week that Warner Brothers Discovery still stand by recommending Netflix. Do you think basically David Ellison and gang need to increase the price as well as sweeten the deal in terms of who's actually good for the money and indeed what the unraveling price might be?
Yeah, a lot of people have said that. Mario Gabelli, Harris Associates, the 5th largest shareholder, Kevin Mayer, who you interviewed last week, Caroline, not an interested party, but well-known Hollywood deal maker. So yeah, that certainly seems to be the case, particularly because if Warner Brothers abandoned Netflix now, they would have to pay Netflix $2.8 billion, and Paramount hasn't offered more money that would compensate Warner Brothers shareholders for that loss. So yeah, all signs point to Paramount ultimately having to raise their bid.
And I suppose there's then what we were getting at before. The regulatory environment is an interesting one. It's going to be tough no matter which combination, because this has a real impact on Hollywood going forward. The jobs in it, the way in which content's produced, who they're going to sell to. But it also has an impact and has been explicitly or implicitly put forward by the Ellison team that they have a close relationship with the White House. Will that matter? Does that matter?
The Ellisons have certainly positioned their relationship with the Trump administration as a point in their favor. They've said that they're more likely to close, that Netflix has, just so much more power in streaming. Mixed messages from Trump himself. He said he's, going to consider both. This is how arbitrageurs make a living, trying to figure out the tea leaves here. Right now, I would think it's. Maybe people would agree that Paramount might have an easier route, but that's not certain.
It gets also to the idea, though, Chris, too. I mean, there was obviously a little bit of controversy over the weekend with regards to a 60 Minutes segment that appeared to have been canceled at the behest of their editor-in-chief, who at least is presumed to have some sort of ties to some of the folks in the White House. And it gets to this idea as to whether this is truly going to be a regulatory decision or much more of a political one with regards to who gets the rights to end up buying Warner Brothers Discovery.
Well, certainly when you see all of these steps that Paramount and the Ellisons have made, some of them before their time, but Stephen Colbert's show being canceled, the settlement with Trump, all of the changes they're making at CBS News with Barry Weiss coming in and an ombudsman being appointed to oversee fairness. It certainly is a continuation of actions to try to appease people in Washington, whether that continues to be the case. I mean, Trump has complained as recently as last week about his coverage there. So always a wild card.
It feels as though 2026 is going to be pretty big on this particular Hollywood story, and maybe it's a Hollywood story in the making as well from a movie potential. Chris Palmeri is going to have a busy run up to the end of the year. Thanks so much for walking us through what is
I think
Will
Arnett should play David Ellison.
You think?
Yeah, I think
you're putting in that call already.
I'm putting in that call. Yeah, I've actually cast this whole movie out, right?
In your head.
Because you know it's coming. The funny thing is, it'll probably end up being a Netflix movie too.
Maybe it's a docudrama. Maybe they pay themselves.
That would be great. Absolutely. All set in Oahu.
Meanwhile, we've got plenty more coming up. When it's not deal making in Hollywood, we're going to be discussing what's happening in the world of your stock report. Maybe that's a Hollywood drama to come to.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
From Bloomberg World Headquarters, I'm Charlie Pellet with a look at what's happening in markets. We've got the Dow, the S&P, NASDAQ all gaining here. S&P 500 up for an 8th straight month. About 400 shares rising today as the gauge approaches a record. Right now, the S&P up 41, gain there of 0.6%. S&P currently standing at 68.76. Dow Industrials up 253. That is a gain of 0.5%. The NASDAQ Composite Index up 121. On NASDAQ, a gain there of just about 0.5%. The Bloomberg Mag 7 Index higher by 0.6%. And the Russell 2000 Index of small cap shares, broad-based rally right now, that index up by just about 1.2%. Coming up in a moment, we'll take a look at some of the stocks that are on the move today. 10-year yield 4.16% with a 2-year 3.50%. Gold is surging $93 the ounce, 44.32. That is a gain now of 2.2%. And West Texas Intermediate crude oil up 2.7%, 50.05 a barrel on WTI. Bitcoin now lower. Bitcoin down $17, 88,120 right now on Bitcoin. Again, recapping the Dow, the S&P, NASDAQ are all moving higher. S&P up 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. What a great stock roundup. What a great asset class roundup. But we're going to dive back into stocks at the moment because we're tying up what is a shortened week. And we're up across the board, 0.5% higher as we're hearing on the NASDAQ. Let's drill into some of the individual movers. Very pleased to say that we're going to be able to be doing that across the board when we think about who's going to be tracking what moves and when and by whom. And we've got Natalia in the house. So we can look across the board at what's happening with Natalia Kniazhevich. And you're an equities reporter, Bloomberg News. Tell us what's dictating trade for you at the moment.
Right, so let's start with the biggest, one of the biggest movers today, Wall Street, Warner Brothers. The ticker is WBD. Shares are up by almost 5% today. As we know, Larry Ellison, who is a co-founder of Oracle and a father of David Ellison, so he agreed to provide a personal guarantee, irrevocable personal guarantee of this $40.4 billion in equity financing for this Paramount's bid for Warner Brothers. So basically, he agreed not to revoke family trust while the deal has been pending. And also, we know that Paramount offered to increase regulatory reverse termination fee to $5.8 billion from $5 billion, matching Netflix offer. And for now, the next stage is basically to wait and see how shareholders react. And if I'm not mistaken, we do have time until January 21st. So we'll see how this plays out.
Yeah, they pushed back that date for shareholders to react. You're also looking in the energy space. What's going on with First Solar?
Yes, so First Solar, the ticker is FSLR. Shares are up by 6.5%, one of the biggest and highest intraday moves since June 2024. This is after Alphabet agreed to buy clean energy developer Intersect Power. So this is one of Alphabet's biggest deals. Of course, it will help the company to get more access to electricity. The reason why First Solar is up today because Intersect is one of its biggest clients, and First Solar sells solar panels to Intersect, and they have a contract from 2025 to 2029. So it is a big beneficiary of this big deal and trade right now.
I have a feeling that's going to be a trend. Energy for the AI space is certainly one to watch. What about Navan? What are you looking there?
Yeah, so this is one of the post-IPO stories. So we saw that Navan, the ticker is NAVN, shares are up by 5% today. The company was added to broad market Russell 3000 index and small cap Russell 2000 index today. So we see that, yes, the stock is up today significantly, but it's still down by more than 30% since its IPO, which happened in late October. What is interesting is that when we got analysts' initiation, people are very bullish on this stock. The price target is at around $25. Now it's trading at $15. So again, Wall Street is bullish, but the company is still unprofitable. So there is still a lot of kind of uncertainty around fundamentals.
It's interesting. I think there's going to be quite a lot of IPOs coming up in 2026 and everyone's going to be holding on with bated breath. You've got the 1.5 trillion potential coming from SpaceX, but people wondering whether or not OpenAI will be cashing in on the public markets coming. So is IPOs going to remain something that will topic du jour as we see them perform into the next year?
Absolutely. And we are really excited that it's not just big tech IPOs or AI play. We see that some analysts are interested in, let's say, industrials, consumer space companies. So it's not going to be just pure AI-driven stories. So, but yes, 2026. But we said that about 2025. 2025 will be a year of IPO. So unless we have market uncertainty or big volatility, it's going to be a really exciting year.
Oh, well, we're very excited for you to continue to be covering it, Natalia Kniazhevich, there on All Things Stocks. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5 minutes episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere where you get your podcasts. Now, for those watching on TV, up next is the close. You get a little bit more of a Romaine dose. Lucky you. But we're staying with Bloomberg Businessweek. That continues on radio, YouTube, and originals. We're checking in on these markets. We're still trading up 0.6% as we head towards this shortened week. Ahead of the holidays. I'll be back tomorrow. This is Bloomberg.